Today, we welcome Dom,
It really came down to, sticking to one pattern.
who sits near 1.7 million in all-time leaderboard profits. 1.7 is not a
We're
small
happy
number.
with it. Yeah, no. It's not just studying the patterns, it's studying yourself. I think so many people just don't take it serious. Take this serious. I think it's hard to know who to trust anymore, which is why stuff like Kinfo is really important.
Welcome back, everybody. Today, we welcome Dom, who sits near 1.7 million in all-time leaderboard profits. Is that correct, Dom?
That is correct. There actually is more, but it's E-Trade has a funky thing. I know we talked to Carl about it, just how long back they can track. And so we'll just call it 1.7, but before it has said more than that.
1.7 is not a
We're
small
happy with
number.
it. Yeah, no.
We're going to jump into some questions with Dom to talk about him and his trading, see what lessons you can learn from him, a little bit on transparency, a few questions. I'm keen to know who your favorite guru might be, and also just some top tips for traders. But just before we get in, I just want to let people know Kinfo Pro and Pro Plus is now free for your first month. You get access to advanced analytics, reports. All you need to do is log in and click upgrade. But Dom, for you, first question is, you've made 1.7 million plus more. What are you doing, or what do you have that the 95%, the majority of other traders don't have, and that's why they lose?
Yeah, I think a big one, is learning from mistakes, learning from other people's mistakes, but actually then making changes based off of those mistakes. I think most people that get started, myself included, I was unprofitable for about 10 months. You wouldn't still be there if you weren't doing things positively, if you didn't know the patterns, if you weren't making some money. But really learning from the losses, being open and transparent with yourself, writing in the journal, whatever it is, keeping stats, doing something like Kinfo, where, you can actually create an edge for yourself. And for me, it really came down to, sticking to one pattern for probably a little over a year and cutting out so much of the other stuff that was losing me money. At the end of the day, trading is a business, and if you continually do things that lose you more money than you're making, you're never going to be profitable. Most people do have some sort of strategy that is making them money, and they tend to just have a lot of other stuff on top of it that they're doing that, none of the profits really come to light because they're never really ahead. So for me, I think, it's just about learning from those mistakes, making actual applicable changes to my trading based off of the numbers and the analytics, and going, okay, this is what's costing me money. Let's cut it out for a month, cut it out for 3 months and see how we do. And then, maybe it's bringing in a new pattern, studying something different and seeing how we do with that, and then rolling with it. I think too many people want to be a jack of all trades when in reality, I think it's trades, not traits. But, I think it's better to be a master of one and just find something in the market that you can actually have an edge on and stick to it for a while to at least get yourself off the ground.
Yeah, I think the problem that a lot of people had, the main problem that I had is it's so difficult to make money that when you finally find a pattern or a way to make money, you get kind of hooked on it. And then when that pattern stops working, people can't let go. I personally couldn't let go. And that was where my downfall is. But what you're saying is you'll constantly tweak, constantly adapt, and constantly look for the new edges.
Yeah, kind of. I mean, the main patterns that I trade today are the ones I've been trading since the beginning. Except the main difference for me, and I can relate, was 2019. I was primarily trading OTCs, long bias, for the first 2 or 3 years of my career. And I milked it as long as I possibly could while they were liquid, while they were volatile. And then in 2019, they just shut off and there was just no liquidity there, no eyes there. There weren't any runners. And I went through another stretch of, 6 to 9 months where I didn't make any money, and I had to figure out listed stocks, and eventually morphed a lot of the patterns that I had in terms of breakouts for screen days, for shred days, from OTCs into listed. But at the end of the day, yeah, if the pattern that you're trading is no longer there or it's changed, you either have to make changes, understand the different nuances. The market is very cyclical. So, any changes you can make, usually the smaller, the better. The big changes usually take a lot longer for you to get back on track. It's almost like trying to become profitable again for the first time. But stick with what you know. And, for me, it was just translating those patterns from OTC into listed. And there was a lot of differences in the nuances of the way that listed stocks trade, like NASDAQ versus OTCs. And that was a big learning curve for me. And it probably will be anytime you switch patterns. But stick to where your strengths are. It's very difficult to turn a weakness into a strength. it's better for you to take something you're good at and kind of change it into something with a little more nuance to that fits something else, and then you can, become a master of that.
No, makes a lot of sense. So if you had a favorite one pattern, or the pattern that you feel like you've made the most money out of it, what's your go-to number one pattern?
Probably the multi-day breakout, and I started with OTCs. This was the only pattern I allowed myself to trade that eventually got me profitable, because I cut out everything else but that one pattern, which is essentially just all these stocks that we're watching, that people are watching, pre-market gappers, any big runner that goes on a run for a couple days, tops out at like 100, 200, 300% plus, consolidates for a few days without breaking that one high that it set, and then looking for follow-through momentum. So most of the stocks that come on watch that people talk about in pre-market are on day ones. They're on my list for a bit, but most of the time those stocks just fail. So very few end up making it to that point, but the ones that do, that have a lot of volume, that are in the right sectors, the right themes, at the right times of the year, they work really well. And that's where a lot of my biggest trades have come from. Even, I went through a stretch in 2022 to 2023 where I was shorting a lot more and getting a little bit too aggressive with short selling. Even to this day, multi-day breakout is still my biggest profits, even per trade.
Is that kind of a feel thing, or is it a statistics data thing? Like, how did you find out the entries, the exits, where to get in, when to get out, which ones work?
I think it's my most feel-based pattern, because a lot of it has to do with the type of volume that we're seeing. Is it the right theme? Is it working right now? We went through stretches of 2022 and 2023 where they didn't work very well. They've worked really well in recent history here in 2024. I have data and stats on the pattern itself, but in terms of entries, risk levels is pretty predefined for me based off of the consolidation. I'm watching these stocks after they've been really volatile. So they've gone from like $1 to $5, really crazily squeezed shorts. And then maybe they consolidate between 5 and 4 for 2 or 3 days. What's working really well right now is like 1 day breakout. So they go on a run, they have one consolidation day, and then they rip. And so the risk level is pretty easy to me. I kind of call it the death line, that moment when I feel like front side's finally over. And then, I've kind of tweaked my system over the years so I could stop buying the actual resistance level, because I don't like having my entry up there where I expect the volume to come in, where there to be the most amount of volatility. So I've really tried to, and that's more of the biggest art of it to me, is the entry, which is, sometimes early, and I don't mind sitting in stocks for a day or two, but just got to be really careful with the fundamentals and which ones have overnight risk, and then looking to add into that position as it does break through the resistance.
Okay, I'm going to come back in just 1 second. I've got a quick message from a sponsor, and then I'm going to ask you a few questions about risk management. If you're an active trader, then Centerpoint is the broker designed for serious traders like you. Centerpoint offers advanced trading tools, flexible routing options, and an extensive short inventory to give you the edge you need with next-level customer service. When you join Centerpoint, you gain access to Centerpoint Edge, an exclusive program tailored exclusively for Centerpoint clients. With Centerpoint Edge, you get free access to over $7,500 worth of industry-leading trading tools that you won't find at another broker. This includes amazing resources like Kinfo, Benzinga Pro, Trade Ideas, Dilution Tracker, and more. Click the link in the description to elevate your trading experience with Centerpoint, where active traders get more. Okay, so Dom, I have heard, watching a few other podcasts about you, that you've been praised in the past for having strong risk management, for being a risk-first kind of guy. Do you have a sort of a secret to your risk management strategy, or how have you got this reputation?
Gosh, I wish it was as good as it used to be, because I used to wear that on my sleeve and be really proud of it. I went through a stretch when I started shorting these Chinese bumps in 2022 when that kind of all went out the window, and I have taken time to kind of redefine it for myself again. But I think it really is learning from others' experiences. I remember watching Tim Grittani in the beginning, watching Dux, watching Roland, Kellogg, learning from people's big losses. And it always looked so painful and so horrible, and it sets you back months and months, if not a year or more, and watching people blow up and exit the game. And it just seemed so, like manageable, like you were in more control than you think. Like I know there's the one-off situations where gaps happen and offerings happen and slippage happens. I've had a couple situations where there wasn't much more I could have done except think about maybe what I should have done beforehand and maybe not been in that position, maybe not swung overnight. But for the most part, cutting a loss should never be something you have to think about. And I think that's one of the first places you should ever start when it comes to trading. I think you should be risking an amount of money at the beginning that you feel comfortable losing. I don't mean like an account wise, but like $100 a trade, $1 a trade, $50, something that you feel no emotions when you take that loss, because, I want you to get to the point where you feel like you're okay losing it for the potential of the profit that's going to come with, the studying, the experience, and what happens when the patterns work over time. But for me, it was just learning from people's experience and not wanting that for myself, because it's just such a, drawdowns of any sort, whether it be a gigantic, disastrous loss and you just don't cut a loss and it gets worse and you bag hold or you get squeezed to the short on the short side, or you go through a stretch where you just have a bunch of bigger than expected losses and you go through drawdowns. It just kills momentum. It kills consistency. It's really hard to come back from. You usually have to fix your mindset and your brain, and so much more of it has to go into it than, if it's just a 1 hour loss and you just take it every single time. And it's never a disastrous situation, and you're always a couple of trades away from getting back on top. And that's something I've had to do a lot of over the past year and a half. I sized down significantly since 2023 because I was just kind of all over the place. I didn't trust myself. And at the end of 2022 into 2023, because I started to take bigger losses, I started to risk more in the hopes of making more money and scaling up in the game. But the byproduct of that was situations in which I didn't want to risk. I didn't want to lose $5,000 in the moment, so I let it go a little longer. Maybe I added to my position, and then all of a sudden it turns into a $50K loss, a $60K loss, and all of a sudden now you're 20, 30 trades away from getting back to where you were, and that can really mess with your mind. And so I just want to encourage people to really focus on risk management first, so it becomes a habit of yours. So it's not something you have to fix when the size gets bigger, because as the money gets bigger, the disastrous situations become, I lost a car, I lost a down payment on a house. They become a lot bigger than just in the beginning when I'm risking $50 a trade and I lost 500 and I can make that back at my job next week. It becomes much more disastrous. And risk management really is, and you'll hear it from no matter what people trade, whether it's options, stocks, large caps, small caps, that's the place they want you to focus on, because longevity in this game is the most important thing, not about how much you can make on any single trade, but how much of it you can keep.
But what do you say to someone who, you could say it to me because I make the same mistake all the time. It's like you can start trading with just risking $20, and then you'll have some days where you win $60, $70. You think, great, this strategy works and it's working right now, and all I have to do is not let the one loss go out of control. But then you're down $20, and then you think, that's okay, I'm up a little bit on the month, and then you go down $80, and you think, well, I don't want to lose $80, and then you go down $200, and you think, well, let's give 3 days. What advice do you give to someone who keeps risking, and they've lost 10K? At the end of it, because obviously everyone's thinking the same thing and it squeezes and everyone gets basically fucked.
I think hard stops are good. So anything that you can do to take it out of your own control until it becomes normal for you. I think hard stops are great. I only usually use them during stretches, either when I'm walking away from the computer, which I try to do a lot more often now. Either punishments for yourself for a stretch where I got to do a month of, I got to be consistent for a month. No loss bigger than, if you're risking $20, then $50. Like, give yourself a little wiggle room for slippage or a bad gap overnight or something. But at the end of the day, you just really got to no one trade is worth it in terms of like a profit, in terms of a loss. At the end of the day, none of us look at our careers and go, that one trade is where I made everything, or that one, for a lot of people go, that one trade is where I lost everything. And no one trade is worth it. It doesn't matter how convicted you are. It doesn't matter, the size or the dollar loss at that time. You're only down $20. I'm only down $100. Whatever it is, those are the situations that always get out of control. And being able to realize, and maybe that's a great spot for journaling, of really realizing how you felt throughout the whole process of, it was just a 1 hour loss. Now I'm down 100. Now I'm down 500. Now it's really out of control, because you don't want to feel that way again. And no one likes the pain of going through that. I know we get called degenerates all the time. We're gamblers. We're traders. And any, tendency that brings that out of us, we really want to quiet that down as quickly as possible, so it doesn't get out of hand and it doesn't become a habit. Because just as easily as having good risk management can become a habit, letting it slide and going a little further is a habit as well. And that is something that eventually does blossom in terms of, as you size up and as you grow. You see it all the time, these guys who make money for 3 months, 6 months, and they're super solid, and then one day they pop in and go, oh, I lost all those profits. And you don't ever want that for yourself. And sometimes it's just as easy as going, Dominic, Steven, whatever it is, I don't want that for myself. I won't allow it. And you just either hard stop or you just force yourself to do it every single time. Cut the loss, because no one trade is worth it.
Yeah, I think what you said earlier, it really resonated, because for me, I would go on runs of 3 months, 4 months, 6 months, 7 mons profitable, and then I would just take a massive loss. But the warning signs are always there, where you kind of get away with one, and then you get away with another one a little bit more, and then it gets you. But what you were saying is like, look, if you don't follow your rules, you should have a physical punishment, some kind of punishment that say, I don't know, you only drink water, or you only eat a certain amount of food until you save the money that you would have spent on takeaways that cost a loss, or something like that. But for me, what I would do is take a big loss and think, I feel sorry for myself, so I drink a bottle of whiskey. And like, obviously, but that's double bad discipline. Do you know what I mean?
Yeah.
That's not once bad, that's double bad. And it comes down to it, say, look, you should do a punishment, and if you're not willing to do the punishment, then you shouldn't be trading, because you just don't have
disciplined enough
don't
to
have
trade it.
discipline. And so don't bother until you've got the discipline. Which comes
and that's something that I think is just a non-negotiable when it comes to trading. And in any other form of business, something else I like to think about is, what if I was working for someone else? What if this was someone else's money? What if I was at a prop firm, right? That's what I tell one of my students all the time, who's made millions, but goes on these runs of just tilt and will lose so much money so fast. And I'm like, what if I was your boss? What if you were trading a bigger account and it was a prop firm or something? Like, what would you be fired by now? Would this type of behavior get you fired? And if it would, then you need to be serious and harsh to yourself to say, this isn't allowed. And this is just a non-negotiable. If we're going to trade, we follow our rules. And the one rule we should never be breaking is not cutting a loss, not adding to a loss, not over trading something to the point where it becomes a 10, 20, 30 to 1 hour loss, because those are the killers. You can play this game a long time, break even or small gains added up slowly until you hit your stride. But what it's really difficult to do is dig yourself out of a hole that you just keep digging deeper for yourself.
Yeah, and when I looked at your winning percentage on Kinfo, and I think it's 40%. So you're actually taking more losses than you are gains. Imagine that for a job. Lost again. Lost again.
I know. I tell people every time I take a trade, I expect to lose on it, statistically. And it's because I focus a lot. I did a couple video lessons earlier this year, just like how to be a good loser, how to be really good at accept every loss you have, be okay with it. Because, like you said, like the numbers speak for themselves over my career, that it works out for me. So I should never fear any one loss, because it doesn't mean anything in the long run. What means anything is when you pull up my 10 worst trades of all time and you see negative 60K, negative 80K, those are the killers, right? And so I'm not afraid to be wrong. I'm not afraid to lose. Because I focus so much on risk management, I have to focus on risk reward because my win percentage is so low. And that's where I really do think I shine over the long run, is when I'm right, I'm really right. And when I'm wrong with one R.
Yeah, but I suppose it's not trading for fun, because it can't be fun to take losses all the time, and it can't be fun to wait patiently for a trade. It popped up and I lost again. but then it's 2 million. Probably made 2 million at the end of the day. So
yeah. No, yeah, and you have to know what type of trader you are. I know scalpers and quick day traders whose win percentages are 60 or 70%, right? But my brain doesn't think the way theirs thinks in terms of a position. I'm like, I could never sell there. I want more. I want to see it out, play it out till tomorrow, whatever it is. So you have to really know what style fits you. Are you someone that's going to hold bigger picture, like a day, 2 days, 3 days? Are you in and out with 5 minutes? What makes you feel good? Like you just said, some others with a 40% win percentage would probably eat them away, right? I got most of my days, most months are red, small, usually because I'm, really pride myself on being really right on the 1 to 2 plays every month that are there for me that fit my pattern to a T. I size them properly, my risk reward, I can make 10, 20, 30 to 1 on it. And all of a sudden, 5 losers are gone, 10 losers are gone, 20 losers are gone, or I'm way ahead. And that's why for me, it's a math equation. I can't afford to lose 2R, 3R, 4R on any one given play, or multiple plays, or lose 20 to 1R, because the math equation doesn't work anymore, because I don't win enough.
No, makes sense. And so how did the whole thing with Clover start? How did you guys all get together? You all friends in the past, or?
Yeah, we all met through the challenge back in the day. We've all started, I think, 2016 or 17. I think Huddy might have started first in 2015 or 16. But we had Kellogg in there as well. And I think we started going to conferences together, and we just kind of knew at that point we were all kind of up somewhere between like 20K and 200K. And, back then you're all kind of competing like it is on Kinfo, where you see each other's profits and you're neck and neck and you want to do better than someone else. And then you want to learn from them and pick up little tidbits of information. How can I short better, Kyle? And Huddy wants to know for me, how can I long better? How can I buy breakouts? Whatever it is. And we eventually, I lived with Jack Kellogg in 2019. So we became really good friends. We met Huddy and Kyle and Schwartz eventually in 2021 and 2022. But it's just, we became friends. We were all so passionate about trading. At that point, I had already trained like 5 to 10 people in my hometown how to trade. So I really liked that part of it as well. And eventually we just kind of decided if we want to do that and go into the education side and help as many people as possible, then we didn't want to do our own things. We just wanted to do it together and, have different perspectives all in the same place because we all do things so differently.
No, and it's definitely worth following the social media channels. I've seen a couple of the reels and the creative
the TikToks.
I've been working in an advertising agency for 10 years, and a lot of what you do is it's top draw. It's very natural and it's funny.
We work hard on them.
No, dude, I can tell. And in terms of Kinfo, what made you want to subscribe and put your profits on Kinfo? Because you don't have to. You don't have to share your trades. You don't have to show your profits.
Yeah, I know someone in my position who is out there teaching. I think it is important to be transparent and for people to know at least that you know what you're doing. And over a longer period of time than just the last 6 months or the last year, I didn't want to teach for the first few years of my career when I made my first million or made my first couple $100,000 because, call it imposter syndrome, whatever it is. I just wanted to make sure I knew more than I did, go through a few different market cycles, which is important because, I've struggled in the past at different moments. I've shined at different moments in the past. And you look at any one of these traders, it's not always so rosy. And I think people can learn from those stretches where you struggle, the down years, they can learn from the great years as well. But Kinfo in particular, I think that's important. Just to see your overall profits, it's really important to know how you're doing and to make sure that you know your numbers. I think Kinfo is great for a lot of the analytics that they just spit out to you. It's so easy. It's really easy. Where I track everything personally as well on a spreadsheet, so that way I go through the process every single day of having to input my numbers, so that way I'm in tuned with them. So that way when I have to type in a negative $2,000 day, it's not just something that gets uploaded and I can look at it in 2 weeks. I have to actually manually do it, so that way I can feel those emotions. But being able to know really in-depth stats like what day of the week am I profitable? What types of tickers do I make the most money on? What time of day? Your biggest profits versus your biggest losses, your average winner to average loser, your overall win percentage, your win percentage over this month versus last month, how I'm doing on longs versus shorts. I think it's just really, really important to know that stuff. And, a piece of advice I have for beginners, like something that I didn't do for the first 6-7 months of my journey of trying to become profitable, was have a freaking clue of what I'm doing. Actually have data behind what I'm doing and be able to go, this is how much I've made on this pattern. This is how much I've made on this one. This is my win percentage of this pattern. This is maybe a pattern I should cut out. This is what time of day I excel versus when I don't. And when you don't have that information, you really are just gambling and you're trading blind, because the whole point of data and your analytics is to create an edge. If you're a discretionary trader and you're not systematic, where it's just, if I see this type of percentage up on the day, and it fits this float with this type of catalyst, whatever, I short here, risk 30%, I cover at this time. It's not that technical, there is a lot of nuance to it. And, having all that data, personal data, is where you're going to get the most information. It's important to backtest the types of patterns you're trading, but it's really important to backtest yourself and to actually look at, where you're performing well, where you're performing not. And if you don't know that information, stuff like Kinfo is super beneficial, because it just goes in there automatically and it spits out all the numbers. Then you just go through and kind of see it. I just think it's really, really important for people to know that information. It's something I definitely took too long to do. And every time I go through drawdowns and struggle, it's usually the same time that I stop tracking my information.
Yeah, no, that makes full sense. And I think people don't realize how easy it is. It's literally just press one button and then press another button, and then it's all the information is all there. And it's like, okay, that's easy. I've got a philosophical question. I'm going to go a little bit deep with you right now.
Okay.
Do you think the world that we live in right now would be a better world, or is a better world, for having furers and pumpers? Or do you think it would be a better world without the furers and pumpers?
It's kind of, I feel like I feel like I could answer it both ways. I think it's good to have a lot of people on the same side of trades at certain moments in time and to know that they're all on the same side of the trade. Like you even see it with like FFIE even right now that went on an incredible run from 3 cents to like $4. I got squeezed on it. But even now you see there's a Reddit group of like 55,000 people all on the same page. You know, it's the blind leading the blind, and it's really sad to see, right? So the end result is usually a lot of sadness. You know, all the pumps we've seen in the past where people are sold this pipe dream and it looks great for a while, but they're really just the liquidity to make the thing go back down to zero. And that's really sad to see, especially the people who give money to the scammers and the furus, and they'll never see that money again. But so I kind of see it from both perspectives. I think it's really sad. It kind of puts a bad taste in people's mouth for the industry as a whole when it comes to trading, specifically day trading penny stocks. I think it's hard to know who to trust anymore, which is why stuff like Kinfo is really important to have it backed by third party or whatever, so that you can't fudge the numbers up. But I think there's good and there's bad with it. But I think there does need to be probably education on there for people not to just go and follow anyone, to give them any money, and to do the education. You know, at some point, the stock market's a zero-sum game. And if you want to donate it to the market by following some guy that has already bought the stock and you're just pumping it up for him, it is what it is. But it's also become really entertaining. I feel like in the past couple of years with people out there who are just blatantly doing it, it's kind of funny, it's entertaining, and you know, it makes the game just kind of cool. You know, stuff like Roaring Kitty, you know, that's crazy when he's not actually a pumper, but it's hard to say he's not pumping the stock. It's all gray area, but I think it's entertaining.
But I mean, some of these personalities, Roaring Kitty, Zach Morris, they just make the business fun. I mean, for me, it just makes the business fun. As long as you're aware, as long as you're aware of what's going on, it makes it more fun and it brings opportunity. I mean, it's also, I think, like I live in Rio de Janeiro in Brazil. I've lived here for like the last couple of years, and it doesn't have the best reputation for crime, but because it doesn't have the best reputation for crime, it's actually, I have all of this natural beauty in the world's most famous beaches at a very discounted price. So I almost think of that with penny stocks. Like penny stocks have got a shitty reputation. Not that Brazil's got a shitty reputation, but penny stocks have got a shitty reputation. And does that not mean that people like you get this really strong edge to take advantage of it all because other people are scared to go in? Could it be like that?
Yeah, I think because of that, you know, and even when it comes to the furus and stuff, and just any kind of spotlight being shown on small caps or penny stocks, like the GME stuff brought a lot of money into small caps because people don't want to trade an $80 stock if they have a $2,000 account. So they're going to go, and what we've seen over the past couple of weeks, right? A ton of low price stocks moving. What did we see? MBIO go from 12 cents to $1.30 today, from yesterday into today. And that wouldn't be possible without a lot of people FOMOing into this stuff. And so you saw it in 2020 and 2021 with stimulus checks in Robinhood and a lot of that dumb money coming into the markets. And yeah, I think it does. It definitely helps. And because it is a zero-sum game, having the education definitely pays. And it sucks when it gets painted in a negative light, like when you get pushed into that circle and, you know, you're an educator and you're in the penny stocks world, you're a scam. And that part sucks, but I sleep just fine at night knowing what I do is because I want to help people and I actually know what I'm doing. But yeah, it's kind of catch-22 because there are a lot of positives and a lot of negatives to it. But like you said, I think it does make it more entertaining, and I will take as much money as, you know, the more money poured into small caps, the better. You know, put some into OTCs while we're at it.
You need Roaring Kitty in the OTCs.
Yeah,
Mars in the OTCs. Okay, we'll close up on some advice for new traders. So, what I'd like to ask is, what's the biggest mistake that you've made where you would like to pass on that advice to a new trader to prevent them from making that same mistake?
Yeah, we've kind of talked about it with the tracking. I'll try to come up with something different. I made a lot of mistakes. I think consistency is probably the biggest one for me. Like not trying to be consistent in my approach. Not in terms of like over my entire career, like my P&L curve is quite consistent over time, over the 8 or 9 years that I've been doing it. But I've definitely, you know, I always call myself the most inconsistent Clover because, you know, I am not green every month of the year, not green every week. I go through a lot of drawdowns over the course of a month or two where I have to work my way out of them because a lot of the negatives that we've talked about today. So I think it's just consistency and focusing on like an entire year versus thinking about this week or next week and putting so much emphasis on what's going on right now versus, excuse me. Sorry, sparkling water. Without thinking about like the long run. Like I said, no one trade means that much. And I think over my career, I've tried to make that reality, right? When you're in a slow period and there's not a lot of plays out there, whether it's summer, or just a slow week, you just kind of push and you kind of force your will on the market. And all of a sudden in a week where maybe best case scenario is you lose zero or win small or lose small, you're in a huge hole and you set yourself back and then your mindset's wrong. So you go into the next hot period with kind of, your tail between your legs, you're not feeling good. So maybe you get some of your money back, but not all of it in a period when you should have really taken advantage of that market and really shot to new highs on your profit chart. So it's just all about consistency. And, it's taken me until 2023, because at the end of last year, I kind of started this new experiment with myself of sizing down, not recreating, but really only sticking to my patterns and going through a stretch of like proving to myself that I can, be green every month. And I would like to be more consistent overall, because I don't believe, I should ever have a red month. No matter how slow the market is, if I'm sticking to what we've talked about today in terms of risk management, not losing more than 1 hour in any play, not going outside my playbook to find other things that other people are trading, and I truly do execute well in the opportunities that are in front of me, I don't believe there's any market, hot or cold, that I shouldn't be able to excel in. So I think it's just really coming down to consistency and approach, making sure I'm putting in the work in. I got really complacent in last year of, having made a lot of money, having traded quite well, pushing a lot of size. And, I was humbled with some big losses, some stretches where I had to, still digging myself out of a couple of them. And it really affected my mindset. So having that consistent approach of, if you're going to get into this game right now, like start thinking about it, like who I want to be in 5 years, 10 years, 15 years, because, it comes fast, but, you never stop learning. You're never going to master this game. So just nice and slow, like a turtle, slow and steady. And, so consistency in everything that I do when it comes to watch list making, trade plans, risk management, studying material. So I don't, ever think that I'm better than I am. And always just adapting to the current market, as well as tracking everything we talked about before, knowing your numbers.
Yeah, but and also I think when people are looking at these multi-millionaire traders, or anyone who's made more than 500,000, anyone who's made more than $1 million, I think you just automatically assume that these people have just got control over their emotions. They've just got the secret key where you've got discipline and you can cut every loss. But it's not the case. Like when I talk to you, you sound like you've gone through some struggles managing emotions, cutting losses, and you've had fantastic risk management. So it's just, how are you just keeping yourself in check? Like you said before, it's basically just small punishments or having a word with yourself or just saying, look, 5 years time, it's these psychologies, these thoughts.
Yeah. I mean, at the end of the day, what I always come back to is it's like, it's easier just not to make the mistake than have to fix the mistake constantly. So eventually you get to the point where you're going down a bad road. You've gotten away with a little bit of danger and it's worked out for you or hasn't hurt you that bad. And you just be honest with yourself. You say, I don't want that for myself. I don't want to have to get out of a drawdown. I don't want to have to recover from a big loss. And you just start to make better decisions. And it really is a process. Like every time I've come out of a drawdown, you always think even, us who've made a lot of money trading and have a lot of skills and have done really well, like you said, we go through a lot of emotional turmoil. We make a lot of mistakes, sometimes at a really big scale that really affects us negatively. But, how you come out of that, like you always think you're just going to take a big loss and everything just goes back to normal. But your mindset's messed up. Your psychology is all screwed up. It takes time. And so many people want the fast pill to success in this game, and it just doesn't exist. Even once you've made it or done quite well for yourself, like the market's constantly changing. The players are constantly changing. There's always a new challenge, whether it be with yourself or the market, and kind of getting used to just being resilient and just plugging away and realizing it's better just not to make the mistake than have to deal with the consequences. And so sometimes the punishments work, but for me, it's more of just like being paranoid, right? Being on edge a little bit of like, I could swing this overnight and maybe it works out in my favor, but the odds of it working against me are like 50-50. And it could get really bad or really ugly, or maybe they could drop an offering, or they have this filing that they could put out, or news is tomorrow. And I could swing through it, and it could pay off huge, but it's not worth the risk. And you start to realize when you start thinking about this in the marathon perspective of the next 10 years, 20 years, you start thinking about this from the perspective of not one trade means everything, you start taking less of those risks, and you realize you're a lot better off for it. You sleep better at night, and you're pulling yourself out of a lot less drawdowns.
So, I mean, is that just the case? Because I know if it was me, and say, for example, if I just took a bad loss and I saw an opportunity where I could make it all back, I'd be thinking, fuck this, I'm just going to gamble. Just going to gamble. Because I'd want the dopamine hit of feeling great.
Yeah.
But like, are you having a conversation with yourself where you're thinking, look, think 5 years, 10 years, is that how you're literally stopping yourself from taking these decisions? Is that what you're doing? Or do you just know deep down in your head it's just the wrong decision? Like, it's just a bad idea. Like ordering a McDonald's after you've just eaten a McDonald's. Like, you just know it's a stupid thing to do. Is it the same thing for you?
I think it's that, but I think once I've taken the loss or gone through, you know, Kyle is like a perfect example of just being, he's like, for the most part, just like steady Eddie. Like he'll take a 200K loss, show up the next day, short that same stock and make a majority of it back without a fear in the world, right? Whereas for the most part, if I take that big loss, you know, something like TOP where I got squeezed to the high heavens on last year, you know, I didn't trade it again because I just didn't want to compound that loss. And for me, if you do make a mistake and you do break a rule, like just don't compound it. Don't make it worse. If you risk $100 a trade and you're down 1,000 in the morning, cut yourself off. Just stop. Take a day off. Maybe a punishment is I can't trade that stock again. Maybe it's I can't trade for 2 days. Like call your broker and tell them, shut my account down for 2 days. Give me till the weekend. Like whatever you have to do to not make it worse. Like that's always worse. It's the decisions that follow the bad decision are almost always more mentally draining than the first one you make. Because usually what happens is it was probably a good setup that you screwed up on in the first place, right? A setup you would take again. Maybe there's one rule that you would just change, right? Maybe I wouldn't have sized in bigger because I thought it was a hotter market. Maybe I wouldn't have let it test the level 10 times before I cut it, and I got halted onto the upside. Like maybe I would just cut it immediately when I hit my risk and reevaluated, right? It's usually the next thing that we do that puts us in that mental purgatory of just like anger, more tilt. Because then you're just like, am I a freaking idiot? Like, why would I do this again? Why would I let it happen again? And then those feelings are always worse than the first mistake. Like, I'm okay with you making the first mistake. Let it be bad. Like, deal with it once you're out of the position. But the next move, I think, is the more important one because that's usually where people get in trouble, right? A 1 hour loss turns to a 2 hour loss, turns to 5x size, turns to 10x size, turns to now I'm definitely not cutting it. And it's always the compounding of the mistakes that makes it worse than the initial mistake. And so either having some sort of rules with yourself, max losses on your broker, there are ways to protect yourself. You know, I've never done that to myself, probably should have in the past. I've always trusted myself. But there are ways that you got to find what works for you. Like what actually motivates you to make changes. And, you know, because whatever I say to you isn't going to motivate you. You have to find something that works for you that gets you to stay on it. And usually for me, it's like, do it for a month, prove it to yourself. Do it for 2 months, prove it to yourself. Do it for, get to the point where it becomes second nature. And then it's not something you have to focus on because then they become habits and then you're in the clear until, you know, they start to creep back in again. And you got to remind yourself of what I did in the first place to get me there.
I think what you're saying there about compounding is really important because I think for me, some things I can just not cut a loss and then just be like, well, didn't cut it, so I'm a failure and I'm failed again. So let's just see what happens. But what you really should think is, look, I didn't cut that. That is a really big warning sign that I just need to cut myself off for a few days. And look, it's not the end of the world. It only went up 5%. Just get out. Yeah. It's over. Don't pray that it comes back down because it probably won't. So now, makes no sense. Do you have a final tip? Or I mean, what I was going to ask you is, what's the biggest problem that you see new traders get and how could they overcome it? But I want to ask you that, but also if you've got any final piece of advice to close.
The biggest problem that I see with other traders or myself? What was the question?
Like biggest problem for new traders that you face at Clover.
Yeah, I think, you know, like I've said a few times, like most people can figure out the patterns. They can figure out what a multi-day break is, figure out how to trade a day one gapper, learn how to short a first red day. Like that's like the easy stuff. But for me, it really, you know, it's doing everything. It's not just studying the patterns, it's studying yourself. It's back testing those specific patterns to work for you, finding edges within an edge that you can master. But it all comes down to tracking and knowing your business. I think so many people just don't take it serious. Like all those things, really, the answer is like, take this serious. Go through every step possible to be the best. You're trying to fight to be part of a 5% or less club. and you have so much access to people who are part of that 5%, study what they are doing and do those things. Don't just go, I'm going to learn how to trade like Jack, because you probably won't. You won't learn how to trade like Nate, because they, know exactly what works for them, and every trade they take is tailored to them. Find what's tailored to you, stick to it for a period of time, grow your accounts before you go and try to learn something new. But it really comes down to just taking it serious. Too many people trade every day that should never spend $1 on the market. And that's just the truth. Invest in yourself, in your education, and actually use what we're talking about. Like, actually track your trades through Kinfo, do it through yourself, and actually, become very educated on what you do in the markets and who you are in the markets. Learn from it, actually apply it, and then have the discipline to stick to it for a period of time. Because that's when you see every trader go from negative 6K to positive 20K in 2 months. And it doesn't look like they've done anything different. They're trading the same pattern. It's because they found out how to master themselves and their abilities, and only pick certain moments in a pattern, in a trade, when they actually do something. So many people want to trade everything and trade all the time, but in reality, it's very difficult to find an edge in the market. And so when you do, I encourage you to milk it for all that it's worth, for as long as it's there, before moving on to something else and becoming a master at that. And doing whatever you have to do through your data to find out what that is. I always say there's a profitable trader and every inconsistently profitable trader, and they just will never see it because they do so many things. So sticking to some small little basket of, preparation, of actual execution on the trades, only a specific amount of patterns, and just do it for a period of time. Prove to yourself you can do that. Cut your losses. Find a way to get your average winner over 2 to 1. But it really comes down to just taking it serious. Too many people, they will, they put money into the markets at probably, is just a donation, because they're not doing all the necessary prerequisites that are required before you actually can even start to take off in this game.
No, it's not a donation. It's certainly just a trip to the casino, right? It's as simple as that.
Yep.
But, I think we'll leave it there. There's nothing else to add. It's a fantastic way to close. Thank you so much for your time, Dom. It's very insightful, fantastic answers, and a lot of learning points. We'll just close out now with a message from our sponsor. Well, guys, just wait 1 second. I just do want to remind you all, the Center Point Edge offering is available to everyone. We've got the link just down below in the description. Check it out, and thanks for watching.